Hey there, finance fans! Welcome back to Finance News. I'm your host Mahdi, and joining me today is the fabulous Mary. We've got some thrilling updates from the world of global finance lined up for you.
Hi, I'm Mary.
Hold on to your seats, folks, because the Fed is keeping us on our toes, especially with all the global issues like the Russia-Ukraine conflict and the trade war between China and the US. These factors are throwing a curveball into the mix, adding a complexity to the day, and now get ready for the major event of the day. It's time for the Federal Open Market Committee FOMC interest rate decisions.
Wow!
Market buzz is telling us that the FOMC is all set to increase those interest rates to 5.5%. But remember, this is just a prediction at this point. It would mark the 11th increase in the last 16 months, and we'd be reaching heights we haven't seen in 22 years. Jerome Powell, the Federal Reserve Chairman, will hold a press conference right after the announcement. They're all about fighting inflation and showing determination, but some FOMC members might have their doubts about the contractionary path.
Oh, absolutely. Now let's talk about Goldman Sachs. They've got some intriguing predictions about the European Central Bank. Brace yourselves, because they believe the ECB won't commit to further interest rate increases in their July meeting. Quite a turnaround from their support for rate hikes in June, huh? And hey, keep an eye on that euro's currency pair, folks, as Goldman Sachs expects some fluctuations within a range of 1.10 until the year end.
You bet, Mary. JP Morgan has got us all ears with their take on the stock market. Check this out. They're predicting that if there is an interest rate increase followed by a pause from the central bank, we might witness some serious stock market growth. Picture this, a potential rise of 0.75% in the S&P 500. JP Morgan gives this scenario a solid 65% probability, especially considering that the Federal Reserve might drop some major announcement at the Jackson Hole conference in late August.
Now, let's dive into today's top news, starting with the new home sales index. This baby looks at the annual sales of newly constructed homes from the previous month, and it's a big deal for various markets. Here's the kicker, we've seen a rising trend in new home sales since late 2022, but hold your breath, the current period might see a bit of a dip. But fear not, folks. Positive data here could still pump up those mortgage-backed securities and keep that dollar index strong. That's it for now. Stay tuned for the latest updates on the FOMC statement and press conference. They're sure to give us some juicy insights into the future of our economy.
Keep following us here at Finance News, where we bring you all the analysis and updates you need to stay in the financial know-how. Until next time, happy investing!